Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 12th of January 2020, and we're discussing an article in this week's Financial Advisor, a publication for investment professionals, entitled The Dawn of a New Era for the United Kingdom. Now, before we delve into this area, a quick shout out for two videos we produced yesterday. Our Gold and Silver Weekly Update for the week ending the 10th of January, quite a lengthy one this week because there has been so much to cover, plus Global Geopolitical Update with Controversially Greg, where we discuss the ongoing situation in the Middle East, US international relations, and where Greg sees the next major geopolitical event occurring, and what form he believes that will take. Both are well worth a listen, and we've placed links to these in the description box below. Now, back to today's video podcast. Well, needless to say, the issue of Brexit, and then last December's general election, where Boris Johnson and his Conservative Party won an 80-seat majority in the House of Commons, has dominated the news cycle in recent times. In fact, the Brexit situation has been at the foremost of most headlines since the United Kingdom, via a referendum, opted to leave the European Union, which was voted marginally in favour of leaving on the 23rd of June 2016. Now, since then, there has been all sorts of scare stories of Britain entering into an economic slump, with interest rates having to rise dramatically to save the pound, and house prices and equity markets crashing as investors flee the UK. Well, since the vote, sterling did weaken, but has regained much of its losses. Not all, but a fair proportion. Equity and housing markets have risen, and the economy, though weak, is still ticking along. It would, however, be untrue to say that the UK has had over the past 3 to 4 years a robust and an invigorating investment environment, as the uncertainty caused by even the idea, let alone the final blueprint of a Brexit withdrawal, has put off many investors of seriously investing in the UK and British business, and has also kept equity markets, though rising, within relatively tight bands, while others, like the United States, Dow, Nasdaq, and S&P 500, have soared. Now, some commentators claim that this is about to change, and we've produced some videos on this subject back in December. Well, we have now a new advocate for the resurrection of the United Kingdom, and his name is Christopher Peel, who is the Chief Investment Officer of Tavistock Wealth, part of Tavistock Investments plc, a UK-based but globally traded wealth management and investment company, with over 300 advisors helping some 70,000 private clients look after in excess of £3 billion worth of investments. Now, this is what he has to say in his article published this week. The Dawn of a New Era for the United Kingdom by Christopher Peel, Chief Investment Officer of Tavistock Wealth. Published 9th of January 2020, Financial Advisor. Quote, "The political paralysis that has been traumatizing the United Kingdom for the past 3.5 years has finally been lifted. The Conservative Party majority of 80 seats, the biggest since Margaret Thatcher's third victory in 1987, means the newly elected government will now be able to move forward at pace with Brexit, as well as implement a range of domestic economic programs such as dealing with the National Health Service. International asset allocators are now looking at the United Kingdom for the first time in many years, and this will be the catalyst for a significant rally in sterling and UK equities. International investors have shunned UK investments since the EU referendum, but this is likely to change in 2020. The decisive outcome of the general election means the Prime Minister and the Conservative Party have a clear run for the next 5 years, during which investor confidence will return. Since June 2016, large, mid and small cap UK equities have suffered, particularly those doing business primarily in the United Kingdom. However, the landslide victory for the Tories should attract foreign capital back into the UK and encourage domestic companies to reinvest in their businesses. UK equities are positioned to outperform their peers in Europe and in the United States. Following the one-sided election result, both the FTSE 100 and FTSE 250 have rallied, and sterling rose 2% against the US dollar, hitting a 39-month high against the euro. We expect this trend to continue well into the new year. With the restoration of political order, it is likely that many companies, particularly those in financial services, will expand their operations, specifically in London. This investment will trickle down into other areas of the economy. For example, it will support the commercial property market. Investors should consider increasing exposure to commercial property and to companies that generate the majority of earnings from within the United Kingdom, namely FTSE 250 firms. UK interest rates are likely to stay low for the next 12 to 24 months, and the outlook for fixed income securities is negative. The chance of significant price appreciation is much lower than price depreciation. Real yields in the gilt market are negative, nominal yield less the inflation rate, and prices are expected to trend lower with returns significantly less than the average dividend yield in the UK equity market. In a multi-asset portfolio, the allocation to gilts should be close to zero, and corporate bond exposure should be limited to duration neutral. Gold and dividend-paying stocks are a better proxy for defensive assets in the current environment. For UK-based investors with international holdings, foreign exchange hedging will play a vital role in the coming year. Sterling is likely to trade higher through 2020, returning back to pre-referendum levels versus the US dollar and euro. A 10 to 20% upward move in sterling is very realistic, and a currency overlay program is essential to protect against capital losses. It is important to remember that the shape of the trade deal with the EU is still many months away, but Boris Johnson has a solid track record of getting things done. He has become a winner, having become the leader of the Conservative Party, won a general election with a huge majority, and reopened the withdrawal agreement with the EU. He now has the wind in his sails, and his newfound mandate is comprehensive. Labour and the Liberal Democrats have been humiliated. However, the Scottish National Party could be a thorn in his side, given that Nicola Sturgeon refuses to accept the outcome of the previous referendum on Scottish independence. Beyond the United Kingdom, this year's US presidential election is very important for the global economy because of the pro-business growth policies implemented by President Trump. The Democratic challengers have stated they will change direction and raise taxes, curtailing one of the longest growth cycles for many generations. Another 4 years of Trump-on economics will promote further economic expansion in the US, dragging the UK and the rest of the world along with it, especially once a trade agreement with China has been concluded and the ratification of the United States-Mexico-Canada agreement. A Trump victory will underpin the global equity markets for a further 1 to 2 years, adding another 10 to 20% to the current bull market. A victory for the Democrats, especially Elizabeth Warren, would end the cycle abruptly, causing a long overdue correction. In summary, gilts are extremely overvalued, but sterling and the UK equity markets have become investable again, following the seismic electoral shift at the general election. Mr. Johnson campaigned on a very clear and simple message: get Brexit done. This will now happen on January 31st, and the transition period will last only until the end of the year. The political fog has finally lifted, and both domestic and international investors can allocate equity capital with the knowledge that there is now a leader with clarity of vision residing at number 10 Downing Street. It has been a difficult few years, but a new golden era for the United Kingdom economy is just around the corner. Patience and foresight will be rewarded handsomely. End of article. An interesting commentary, don't you think? To be fair, this view is shared by an increasing number of UK investment professionals, plus a growing band of economists. Of course, we have to still be aware of the years-old doctrine or saying, when America sneezes, the world catches a cold. So much of this new era will be predicated on successful trade deals that Johnson can make, and especially with the United States, plus, of course, that the US economy also continues to remain robust as well. One of the advantages of a channel like ours is that we live outside of the United States, and although perhaps we do not see at the micro level the everyday lives of a traditional typical American, if there is such a thing of course, we can see, observe and appreciate the macro picture more. And rest assured, if you are sitting there thinking that you have it tough economically, let us assure you, you are far better off than at least 80% of the rest of the world, if not an even greater percentage. So when we hear the nonsense coming out of pumpers' mouths that your economy is on the verge of collapse, not only is this untrue or at best misleading, they also forget to mention that if it is true and we're wrong, then virtually the whole world will crash, but harder and quicker, still leaving US citizens proportionately better off. What did catch our eye is the conviction that Christopher has that the re-election of Trump as president will be good for the United States and world economies. Not something shared by everyone, but a most interesting position, and one that should not be ignored. There is no doubt that from a jobs perspective, the United States is thriving, and its equity markets continually reach all-time highs, again something we predicted as far back as early last year, when others were painting a very different picture. Of course, every bubble has to eventually either burst or deflate. But what no one really knows at this stage is how big that bubble can become before it does so. Meanwhile, stay observant. Look for investment opportunities and attempt to capitalize as and when you can. Rest assured, when the tide does turn and the world's economies do seriously turn down, one needs to be in a robust financial position in order to deal with it and survive it. Thank you for listening, and please, if you haven't already done so, kindly subscribe to our channel and press the bell sign so that you are notified of our videos as and when they are published. Our YouTube statistics show us that slightly less than 2/3 of those who listen to our videos are subscribers, and only 20% of these have pressed the bell sign, so that they are notified of our video podcasts as and when they're published. So many people are in fact missing out on what one day could be an urgent video where time will be of the essence. And if, for only that reason, please subscribe and press that little bell. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.